Hi, this is James Shug with Westpac London's end of day report for Monday, April the 23rd. Well, the European session never really had much of a chance. I mean, it was already weighed down by the release of the HSBC Chinese PMI, which showed another sub-50 reading, but also that Chinese data preempted very weak PMI results for the advanced European reports for April. The composite PMI fell from 49.1 to 47.4, reflecting a fall in the services PMI to its lowest since November, and the factory PMI actually fell to lower than at any point in the week patch last year. In fact, the factory PMI at 46 was the weakest since June 2009. So a very weak picture painted at the start of the second quarter in terms of the economic growth story in Europe, if indeed that's an accurate reflection of what's going on. There was a bit of a spike in the early part of this year, and the PMIs lasted 1 month above 50, but since then it's been very much to the downside. You've got to throw into that mix the Dutch political developments, where the cabinet's resigned, effectively operating now in a interim arrangement. They've tendered their resignation to the Queen, hasn't been accepted yet, because of the breakdown of the coalition in relation to the austerity measures which are required as part of the current budget negotiations. Now, if you haven't got a government, you haven't got a budget, you're not going to hold on to your AAA rating, and that's proved to be a real concern for financial markets in Europe. On top of that, we had the Bank of Spain put out a preliminary estimate of first quarter GDP growth for Spain, minus 0.4%. Now, the official figures don't come out until the 30th of April, but if that's confirmed, that'll mean that Spain's in a technical recession, because of course the fourth quarter last year was negative. That means that Spain will join Italy, already in technical recession, with the third and fourth quarters of last year, quarters of contraction. Holland as well, and of course Germany had 1 quarter of contraction at the end of last year. In fact, the only major economy that I can think of that wasn't negative in the fourth quarter was France, although the French had a negative quarter earlier in 2011. Anyway, so we're heading towards May 12, I think it is, when we're going to get the first quarter GDP numbers for Europe. But the way the figures are shaping up at the moment in terms of these preliminary estimates, well, certainly for Spain, and we'll get one for Germany shortly too, it does look like the European Central Bank, before too long, well, certainly in June, will have to revise down their forecasts for 2012 GDP growth. They've currently got a midpoint of a forecast range of minus 0.1%. At Westpac, we're looking for a 1% contraction in European GDP growth this year. So those are the main factors. China initially, Holland, the PMIs in Europe, and the Spanish recession. There was no data out in the US today, but that's enough. That was enough to pull markets down very sharply. We've got in London a loss of 1.9%. Commodity producers were marked down in particular, and financial stocks too. The French market down 2.8%. The Germans off 3.4% today. The Spaniards down 2.75%, and the Italians off almost 4% today. And as I'm speaking at about quarter to 6 in London, the Dow is down just over 1% at 12,895. I mean, commodity markets have been hit as well. We've got losses of between 1.5% and 2% for the likes of copper and oil. I mean, oil's now on $102.25 a barrel. Smaller loss for gold, down about 0.6% at $1,633 an ounce. Now, the Aussie dollar is at 1.03 against the US dollar. It's been losing ground in this risk-off environment. The next hurdle for the Aussie will be the CPI figures, which are coming out Tuesday, or that's today, Sydney time. We've at Westpac revised down our forecast for that following the PPI data yesterday, such that the annual core rate on our forecasts will fall from 2.6% in the fourth quarter to 2.3% in the first quarter. Certainly, well, it actually happened with the release of the fourth quarter figures, but concerns late last year that and even earlier this year, that there was a bit of an inflation issue to be worried about in Australia. Well, we think they were certainly dealt a pretty heavy blow in the fourth quarter, and they're going to be knocked right out of the ring in the figures for this first quarter coming up. Okay, that's it from me for now. I'll be back tomorrow.